heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde is off today. This is Bloomberg Technology. Coming up, full coverage of the second biggest bank collapse in US history. We'll discuss the outlook for funding with Joe Zhao of Millennia Capital. Plus, another big week for tech earnings ahead with AMD, Qualcomm and Apple all reporting. We'll get a preview of what's to come. And SoftBank's chip design firm ARM filing confidentially for an IPO in the US over the weekend. More on the offering later this hour. First, let's get a check-in on the markets. When it comes to the equity space and particularly technology, some slight outperformance. You look at the Nasdaq 100 off by just 0.2% relative to the S&P 500. We're kind of treading water in what's a really busy week. You heard there about some of the big tech names that are due to report earnings. We also have a Fed meeting, which is something to take into account. Slight outperformance in the semiconductor space. The stock's up almost half percentage point. And then yields climbing. The US 10-year up by 12 basis points, 3.5%. It's interesting to note that there's some corporate issuance out there. Meta going to the bond market. Since the kind of banking crisis in March, the first mega caps do so. We'll bring you those details later in the show. Really, there is just one story that we're talking about, and that is JP Morgan stepping in to acquire First Republic, taking on portions of its loan book and deposit base in a deal negotiated with regulators. You see JP Morgan higher by 2.7%, some kind of feel-good, a bank, the biggest bank that's got even bigger. Let's get more details on First Republic. Bring in Bloomberg's Sonali Basak, who's out in Los Angeles at the Milken Conference, and I imagine this is the topic of the day, Sonali, but bring us the details of this JP Morgan deal to acquire First Republic.
It certainly is, because as you say, we are watching the biggest U.S. bank get bigger. As we know that there were other bidders behind the scenes, we had reported that Apollo and BlackRock had supported, for example, PNC's efforts to buy the company as well. Yet the reason JP Morgan had emerged as the biggest bidder here and the most successful is because, as we know it, that the cost to the deposit insurance fund for the FDIC was the least under a JP Morgan acquisition. Now, any other politics that come out beyond this is up for debate. But the question here is, does this stem the banking crisis? We have seen a lot of California lenders now go through a series of struggles. Some, as we have been talking about, have failed. This one now is another major deal, and it certainly gives JP Morgan an even more attractive base of customers, high net worth individuals. Remember, when we look at First Republic, there has been a lot of bleeding already for the last couple of weeks and months, but this deal and an iconic franchise is certainly a coup for JP Morgan.
You go back to when SVB collapsed, and one of the beneficiaries was JP Morgan, right? Snapping up some of the venture capital and startup customers or depositors. You posed a question there, Sonali, about whether this fixes the sort of systemic risk. Are there any answers to that on the ground yet at Milken Conference in LA?
Yeah, you can kind of put it into two buckets here. You have a lot of banking titans that believe that there could be some pain among a couple of more regional lenders. We just talked to Julian Salisbury, for example, the CIO over at Goldman, who believes it's almost death by a million cuts, where you see sustained pressure on the industry, but not wholesale failures or systemic risk. On the other hand, you talk to the likes of a Mark Rowan, the CEO of Apollo, which was behind that PNC bid, and there's a second wave, really. There's a lot of problems under the surface when you look at other asset classes like commercial real estate. So where the pain will be felt further is a huge open question, Ed. And the fact is that there could still be more pain among this industry as well as other parts of the market as we continue to see the pressure of high interest rates on the system.
All right, Bloomberg Sonali Basak out at Milken. Go work the corridors. We'll see you later in the week. Let's stick with this story, and for more, let's bring in Millennia Capital investor Joe Zhao. Joe, I would frame you as a venture capitalist with a knowledge base in fintech, the banking sector, but you also have your own exposure to First Republic. Can you just tell our audience what that exposure is?
Yeah, so as a VC fund, we have portfolio companies in our operations which run on both Silicon Valley Bank and First Republic.
So, Joe, this outcome, what do you make of it? I mean, JP Morgan becomes much bigger, but they've stepped in and saved First Republic, essentially.
Yeah, I would say this First Republic incident is a little bit different than the Silicon Valley Bank incident in a few ways. SVB was largely unanticipated, but in the case of FRC, most VCs and founders have already made contingency plans in the last few weeks. So in fact, most founders, entrepreneurs, VCs now have several bank accounts with different banks. And so, we're not unprepared for the transition here now. Our accounts at FRC would roll over to a new acquirers, JP Morgan's account, so that would ensure continuity. But I think on a broader sense, the difference between FRC and Silicon Valley Bank was FRC has also a larger non-tech consumer base, and I think this outcome helps ensure the continuity of that. But for businesses and tech businesses and the VCs, we've already been largely prepared for this outcome.
Prepared how? Are you talking about diversification of banking?
Yeah, since a few weeks ago, most VCs and most founders, at least in our portfolio and the ones we've connected with, and the ones we're seeing in the market, have opened several new accounts at different banks, even in some banks, multiple accounts. And there's also fintech players which are offering a higher deposit insurance than 250 because they're opening accounts with multiple banks. So that ensures you can actually, let's say, add 4 250Ks to get to $1 million. So that's been underway for, since the SVB fallout. And so when, this incident kind of occurred with FRC, VCs and founders have already kind of been making contingency plans. Plus, even if the ones that haven't, I guess their deposits will be insured by the largest bank in the US. So I think, founders and VCs feel much safer this time and secure this time than last time.
Joe, even for private market participants and VCs, there are some big picture questions, one of which is what does the Fed do this Wednesday?
Yeah, financial stability was always sort of a third objective by the Fed after inflation and unemployment rate. If you look at sort of the Fed's Chairman's remarks, I think he did say in the presser that we expect to inflict some pains, and I think what's happened here within the broader financial system is not inconsistent with what they would anticipate. I think the real question in my mind is, to what extent will the banking crisis and fallouts sort of deter the Fed from raising rates? In my view, they're probably going to raise rates another 25 bips at this meeting. But in my own view, holding rates at 5.25 to 5.5 is also very, very restrictive. And so financial stabilities become a large concern for the Fed and might actually deter the Fed from raising rates further. But by keeping rates at current levels, they're still being very restrictive on financial conditions, and that could really kind of temper down inflation over time.
What is the environment like right now, Joe, for VCs like yourself considering writing checks for startups trying to raise money?
There's two schools of thought. My own school of thought is this is actually the best time to invest because valuations are down, and we believe this is a healthy reset for valuations and companies. But there's another school of thought, which is many VCs are actually kind of holding back from investing. And so, but within the broader system, there's, amongst kind of this period of weakness, I would call the whole AI kind of a generative AI sort of innovation has been introducing some new life back into the ecosystem. So I think broadly speaking, most VCs are slowing down, not only on investing, but LPs are slowing down on investing in funds. But one bright spot is generative AI, which seems to offer a lot of new blood and excitement back into this ecosystem.
Hey, Joe, there was a guest on Bloomberg Television earlier saying that banks and markets don't have crystal balls. They don't have clairvoyance. But as you look into the future, does the JP Morgan intervention kind of settle things a bit for now?
I think in the short term, yes, because JP Morgan, I looked at the assets, they're 15 to 20 times larger than FRC's assets, and that should really contain sort of the spread of the bad assets. But also, I think having and there's debates on whether it's politically viable or not. But I think having the largest bank to kind of step in and contain sort of this issue kind of helps restore the system, kind of very much like in 08 and 09. But I guess the question is, are we fully through the banking fallouts? I think for large banks, which have regularly passed the Fed CCAR test, the stress testing, I personally think they will be fine. I think mid-sized banks, management who haven't been on top of it would be on top of it now. My actual concern would be with the smaller banks, which maybe I would expect to see a little bit more stress in the banking system on the smaller side.
Right.
I think for the larger banks, I think the crisis is in the short term contained.
All right, Joe Chow of Millennia Capital, good to catch up. Thank you for your time. Now, another busy week ahead for earnings with Apple, AMD, and Qualcomm all reporting numbers. Let's get a preview of what to expect from the iPhone maker with our own Mark Gurman. Good morning to you, Mark. What's on deck for Apple?
Yeah, good morning. Thank you for having me. So this quarter is likely to play out a bit similarly to last quarter, right? Bloomberg consensus at this point anticipates about a 5% annual decline. Last year, for the second quarter, Apple reported revenue of about $97 billion. For this year, 2023, the second quarter will come in at around $92 billion. That's according to a summary of analyst estimates. Now, within that $92 billion, it appears, according to these estimates, that all of the Apple major product categories, aside from services, will see a bit of a decline. That includes the iPhone, the iPad, the Mac, as well as wearables. Right, the iPhone decline is likely to be less significant than in the previous quarter, because in the previous quarter we had the supply chain challenges that have now been essentially fully resolved. But you'll still see, the iPad and the Mac go down quite significantly compared to the year-ago quarter. Services, however, the estimates indicate that should be up a little bit, which obviously is positive news and positive growth somewhere for Apple in this quarter.
All right, Bloomberg's Mark Gurman. We're all waiting for Apple later in the week. And by the way, Mark's Power On column was out over the weekend. If you don't subscribe, do so. He's focused on Apple Watch and software. Thank you to Mark. Now, sticking with earnings, another stock we're watching is Checkpoint Software, out with earnings that, frankly, disappointed to the downside as revenue missed expectations. Shares at one point in the session down by the most since February of 2021. Now, coming up, how the AI startup Pinecone managed to get a $750 million valuation in a $100 million funding round. We'll talk to the CEO, Ido Liberty. That's next. Meantime, here's what Wing Venture partner Jake Flommenberg, who took part in that round, had to say about it last week.
And so if you're building a generative AI startup or a generative AI application, and you want to marry that with your own company's data, or if you want to remember things from one question to the next, you need a vector database like Pinecone.
The White House is probing how companies use AI to monitor and manage workers. The Biden administration says such practices are on the rise and can inflict significant harm. Just last week, the Minnesota State House actually passed a bill to require companies like Amazon to provide warehouse workers with copies of data they collected on their pace of work. California and New York have passed similar legislation in the past couple of years. Let's keep talking about AI with Pinecone, an AI-powered platform which just raised $100 million in a funding round last week, valuing the company at $750 million. Founder and CEO Ido Liberty joins us now. We would describe Pinecone, Ido, as the long-term memory for AI models, right? Explain what Pinecone does.
Provides exactly that. I mean, when we think about AI models as being smart, they might not be very knowledgeable. And if you see all the issues that people have had with what's called hallucinations, basically AI models giving very smart sounding answers, but with wrong information, that is solved by equipping them with long-term memory, which is provided by Pinecone.
Interesting timing, $100 million round, a $750 million valuation. You did a much smaller round a sort of a year ago. How difficult was it to raise those funds, and why did you raise the funds?
It wasn't difficult at all. In fact, the fact that vector databases really asserted themselves as a critical piece of generative AI, and the ability to do that at scale and correctly, and Pinecone being the leader in that space, it made that a no-brainer, to be honest. And so it was needed for us to really fuel the future research and development and future investment in the field.
You know, we're covering AI on more than a daily basis here on the show, right? And we're talking to those that are working on foundational models, VCs that are investing in the technology. We kind of break it down to data prep, deep learning, and then inference. Where does Pinecone sit within that development cycle?
Well, it's sort of a different component altogether. This is about search and retrieval and access to your long-term memories. If you are trying to build a generative AI on your own company data, and you want your application to not hallucinate or make gross mistakes, then you have to equip it with that capability, and that's what Pinecone provides. That could be either on training side or data cleaning or in production at real time or customer facing. This happens everywhere up and down the stack. It's just a whole different component. And in some sense, doubling down on what I said before, this is the realization that this is a critical piece and that it's here to stay was exactly what catalyzed both the round and the valuation.
You have customers like Shopify, HubSpot, Zapier, and Gong. Interesting names. In layman's terms, what is it you're doing for them?
When large language models process text, they don't save it or represent it in the same way. And when you want to search for data, when a large language model searches for data, they don't search through it with a regular search engine like you would and I would, like search on Google, but in a very different pattern. And that pattern is supported by Pinecone. And so if you're on Gong and you want to see whether some salesperson offered some discount for some customer, that's much easier to do with the large language model searching through the data with Pinecone than with keyword search, for example, right? Same goes for Shopify, who built a shopping assist app very quickly with those capabilities, surfacing the actual information about their products and so on, the customer's products. It's really retrieval and search in the way that AI models expect them to happen. And that really powers very new kinds of applications, especially where hallucinations is something that you really try very strong to avoid.
Ido, is there a risk that the pool of data is finite, that it just runs out for training foundational models?
I'm not sure what you mean by that, to be honest. Like, that
so there's a debate.
We're unable. Okay.
Well, there's a debate from industry participants, right? There are lots of data inputs that go into training generative AI tools, right? If you take, for example, Google and Bard, they clearly have an advantage in the data that they're able to draw on to train that model. Others have less access, especially those that are training models where there are far fewer parameters and inputs. I guess my question is, how are you helping and make data available, and what the risk is that there is not sufficient access to data to train future models?
So, first of all, I don't think that is a serious risk for training better models, because I think we have scarcely tapped the single percent of what's available out there. But what Pinecone allows you to do is actually make your AI models a lot more accurate and a lot more actionable without retraining them, which is, I think, why it has been so successful and why we ramped up thousands of customers, even just in Q1. Because, with the large language model, even without it being retrained, if it's given the right context and the right information from which to construct the answer, then you don't have to bake into the model all the data in your company. You just have to present it to the model at the query time. Say, hey, I wanna see whether this customer was offered a discount, and here are 20 snippets of text that I think contain the answer. Can you distill that from that and give it to me in a reasonable way? That's a much easier problem and a much more manageable problem to solve.
All right, Pinecone founder and CEO Ido Liberty, thank you so much for joining the show. Now, coming up, seller's remorse, Twitter co-founder Jack Dorsey coming out against Elon Musk. We'll break down the comments next in Talking Tech. This is Bloomberg. Time for Talking Tech. India's most valuable startup, Baidu, looking to reinsure employees and partners after a weekend raid of the company's offices by the agency that investigates money laundering in the country. The investigations come at a time when the education company, valued at $22 billion, is in talks with investors to raise funds to address a liquidity crunch. And Alibaba co-founder Jack Ma is joining the University of Tokyo as a visiting professor. Ma is set to assume the new position today and will provide advice on research topics and conduct his own research. Will also give seminars about entrepreneurship and innovation. Plus, Twitter co-founder Jack Dorsey is offering sharp criticism of the social media's new owner, Elon Musk, and his handling of the deal after previously being publicly in favor of the sale. When asked if Musk has proven himself to be the best possible steward for the platform, Dorsey said, quote, no, nor do I think he acted right after realizing his timing was bad, nor do I think the board should enforce the sale. Now, coming up, will an AI bot take your order soon? The impact of generative AI on the restaurant industry. That's up next with Presto interim CEO Krishna Gupta. Another company we're watching, Meta, emerging as the first mega-cap technology company to tap the US investment-grade bond market as turmoil in the financial sector has toppled 5 banks since March. The social media giant looking to raise $7 billion in a 5-part deal, according to a Bloomberg source. A little bit of pressure on the shares, softer around 0.8%. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Ed Ludlow in San Francisco. Going to get a quick check on the markets. We're basically flat as a pancake on the NASDAQ 100, treading water. We do have earnings this week. Apple, kind of the highlight of that on Thursday. The Fed meets on Wednesday. There's some corporate issuance out there in the market. You look at the 10-year yield, we're up by 12 basis points, 3.5%. Risk-off mode kind of taking hold of Bitcoin at $28,000 US per token. The banking sector, of course, our main focus when we look at JP Morgan pushing to the upside. Why? Well, it's stepped in to acquire First Republic. We've been covering that throughout the show. Something the regulators initially did not want, the biggest bank to get even bigger. But now there is this feeling out there, and our colleagues out in Milken will be having this discussion in LA about the risk kind of being stemmed for now. That is where we are in JP Morgan Chase, up 3.3%. But again, Fed and a big earnings week when it comes to tech. We've got to talk a little bit about AI. Now, here's what some of our guests have had to say about what they think of generative AI's applications and where it's best suited. Have a listen.
This technology really takes personalization to the next level when it comes to any type of education, but specifically financial literacy, which is so complicated.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
There'll be hundreds, if not thousands, of opportunities to build interesting applications powered by AI.
Technology makes it easier to create. Generative AI is accelerating that trend by decades, maybe centuries.
To me, brainstorming is actually a perfect use case for these tools.
I don't really care whether you're using AI or some other technology. I care what are you delivering to what set of customers and how delighted are they going to be.
So I'll show you these two names, Starbucks and Yum Brands, reporting earnings Tuesday, Wednesday. AI, artificial intelligence, has absolutely dominated earnings statements and calls over the last 10 days or so, particularly for the technology sector. Do we see that happen again this week when it comes to QSRs, quick serve restaurants, and some of the more consumer-facing companies? It's a really big question if that carries on throughout this earnings season. For more, let's bring in Presto Automation Chairman and Interim CEO Krishna Gupta. Presto, one of the largest providers of AI-powered tech for restaurants like McDonald's, Applebee's, Chili's, and much more. Krishna, what do you think? Is AI going to dominate the earnings narrative for this sector this week?
Ed, great to be on. Well, let me start by saying I completely agree with Keith Raboy, which is that I don't care whether it's AI or not. All that matters is, are you creating something that's immediately actionable and valuable for customers today? And we believe that there are a lot of opportunities to do that using AI in the hospitality and the restaurant sectors. So yes, I expect every QSR, frankly, every corporation in the world to be thinking about what are the most immediately actionable opportunities to leverage AI today.
You're focused on drive-through, AI and drive-through. How does that work? Actually, Krishna, bear with me. President Biden is speaking in the Rose Garden about First Republic. We're going to tune in.
Good morning. Good afternoon. Before we start, I'm pleased to say that the regulators have taken action to facilitate the sale of First Republic Bank and ensure that all depositors are protected and the taxpayers are not on the hook. These actions are going to make sure that the banking system is safe and sound, and that includes protecting small businesses across the country who need to make payroll for workers and their small businesses. And so let me be very clear. While depositors are being protected, shareholders are losing their investments. And critically, taxpayers are not the ones that are on the hook, as I said earlier. Now, going forward, I've called on Congress to give regulators the tools to hold bank executives accountable, and I've called on regulators to strengthen regulations and supervision of large and regional banks. And folks, we have to make sure that we're not back in this position again. And I think we're well on our way to be able to make that assurance. And as I said to my introducer, Jill, a moment ago, she's really impressive, isn't she? And the guy sitting next to her, if you disagree with me, it's her husband, and you're in deep trouble. Welcome, man. Speaking of small business, you got your own small business. I want to thank you. Look, folks, we've got a lot to do. And the most immediate thing we can do is...
President Biden speaking there in the Rose Garden about JP Morgan's acquisition of First Republic, saying that the banking system is safe, that all depositors have been protected and taxpayers not on the hook. Going forward, the president wants Congress to give regulators the tools, he says, to hold banking executives accountable. But again, the president making brief comments about JP Morgan's acquisition of First Republic, which has played out this morning. We look at JP Morgan shares continuing to push higher in this session following Monday morning's news. Presto Automation Chairman and Interim CEO Krishna Gupta is with me in New York. We were talking about the role of artificial intelligence in the restaurant industry, the quick serve restaurant industry. And I was about to ask you why you're so focused on drive-through. How is something so manual complemented by artificial intelligence?
Well, it's not necessarily complemented. I think it actually ends up being one of the most immediately actionable applications of generative AI in the enterprise, because you have labor costs which are rising. You have a relatively confined problem set in the drive-through. And I don't think in 3 years there's going to be a single drive-through having a human take your orders. I think, voice bots, whether that's ours or someone else's, will be pervasive. They will never get tired of delivering perfect service, upselling the customer, and ultimately delivering a lower cost, higher revenue experience to customers.
Like many of your industry peers, you have looked to OpenAI and GPT tools to complement the work you're already doing. How does that relationship work?
Yeah, well, look, I think LLM technology and generative AI broadly does enable better personalization, faster speed of service, et cetera. For us, we have a little bit of a unique entry into the relationship in the sense that, the CEO of OpenAI, Sam Altman, is a longtime investor in our company, a longtime friend of our founders. So we are very actively in discussions with them and incorporating some of that technology into what we're doing.
What's it been like in the first 4 or 5 months of this year? Are there QSR CEOs phoning you every day saying, get in here now and give us some AI capability? Literally, what is demand for you?
Yeah, look, I think we're at a really unique moment in time where the customer's business needs, which is low margins and rising labor costs, are met with the progress on the technology side. And yes, because of how pervasive this term AI is and everything you're reading or seeing or hearing, it no longer feels like science fiction. I would say in 2022, some of what we were doing felt like futuristic. Maybe it's a 25 initiative. Well, a lot of CEOs and a lot of C-level people and our customers in general are now thinking, well, maybe we can actually deploy this now. Maybe we need to, for the benefit of our shareholders, deploy these kinds of technologies now, because if we don't do so, we're going to be left behind relative to our competitors. We're not going to be able to have that margin benefit that others are enjoying. So yes, the tone of conversations across the board has changed pretty dramatically over the last 6 months.
Does AI displace or eliminate jobs in this industry, Krishna?
I believe, well, it's hard for me to opine on this industry specifically, but I do believe that the adoption of AI overall will actually be relatively neutral on jobs. I believe that's the case historically with any large technology revolution, is that new jobs come up. And we're already seeing that. You need humans, not necessarily incredibly skilled humans, but you need humans to be able to train the AIs, to help them make sure that specific edge cases are not run into. And so at the end of the day, I think there's a lot of opportunity for us to help find new jobs for people. In the restaurant industry specifically, however, you have a unique challenge, which is labor availability. A lot of people still haven't been able to find labor, and we are helping them do that using automation.
Presto Automation Chairman and Interim CEO Krishna Gupta, bringing AI to a drive-thru near you soon. Thank you.
Thank you.
Now, coming up, bridging the gap in venture capital funding for women of color founders. We'll talk about that and more with Fearless Fund CEO Ariane Simone. That's next. So we had to break. Let's take a look at shares of Rivian. Under pressure again, down another 2.5% or so, as investors have little faith left in the ability of the company to compete in a crowded EV market. At least 6 analysts have cut price targets since April. A lot of people pointing to its market cap being exactly the same as the cash that's on its balance sheet. This is Bloomberg. Fearless Fund, the venture capital fund built by women of color for women of color, has recently announced a new industry-specific cohort of the Get Venture Ready program in partnership with JP Morgan Chase. The program is designed exclusively for black women business owners in fintech or the workforce development industry. To tell us more about what this program entails, let's bring in the fund's CEO, Ariane Simone. Ariane, I actually just want to start on JP Morgan because you have announced this partnership with them. They have acquired First Republic. Both of them with significant VC relationships and startups that are venture-backed. What is your reaction to the news that JP Morgan has stepped in to acquire First Republic?
I'm not surprised. JP Morgan has definitely been a leader in the space as far as venture capital is concerned, with emerging fund managers as well as the startup ecosystem as a whole. So I'm not surprised. When it came to even the whole SVB scare and everything that was going on, they were, as investors in our fund, they were one of the first LPs to reach out to see how they could be supportive in taking over any type of losses we may have incurred or anything that may have taken place. Luckily, of course, we had very low exposure to the issue, but we saw early on that they were definitely being a leader in the space and wanting to get more into the startup ecosystem.
Let's get to your relationship with them. I find this really interesting making capital available to women of color, but specifically in fintech. Why fintech?
Well, at the Fearless Fund, we actually invest in CPG as well as technology. In CPG, we're heavy beauty and wellness, heavy food and beverage. And in technology, we're heavy fintech SaaS marketplace. And in the fintech sector, we also have investors, LPs such as JP Morgan Chase, and a few others that are in the fintech business. For us, this makes a very good strategic relationship. Anytime we invest in a fintech company, we know that we have potential acquirers that are invested in our fund that may acquire them later on down the line. So it just makes good for business overall, and it sets up a very good, strong pipeline.
For women of color, in all of the industries that you're investing in, what has the environment been like so far in 2023, Ariane? We've talked a lot about tighter financial conditions on this program, but also inequality, frankly, in how founders and startups are able to navigate those tighter financial conditions.
That is very true. Women of color are the most founded entrepreneur demographic. They are just the least funded. So in any condition, whether there's a market correction or not, they have the biggest gaps of disparity. We exist because we do hope to change what the narrative is in this landscape. As of right now, the profile of a woman of color entrepreneur is somebody who you definitely want to bet on. Their cash burn rates are low. They're not used to large sums of access to capital, so they're very good stewards over their investment. Our portfolio actually is even quite healthy at a time like this because we chose to invest in women of color who are very mindful of their investments.
You're coming to us from Atlanta, Georgia. On this program, we talk a lot about San Francisco, Silicon Valley, Miami, New York, sometimes Austin, less about Atlanta, Georgia. What's the environment like for raising venture funds, founding a business in that city and in that state?
One thing I can say that the whole VC tech ecosystem in Atlanta, Georgia is definitely growing. It's definitely growing. I would like to add, even just for transparency, that is it easy? No, it's not easy to raise capital in any environment, especially when you're an emerging fund manager, and especially when your thesis is for women of color. But we have been blessed by very amazing LPs, such as you saw even on screen with JP Morgan, Bank of America, Ally Bank, Costco, MasterCard, and many others. So for us, even though we are based in Atlanta, yes, we have raised capital from many other areas, including San Francisco, New York, and all the other major areas that you see a lot of financial institutions based.
We had a founder on the show earlier who just closed a $100 million round at a $750 million valuation. But a year ago, you know, even at their last stage, they were about $128 million valuation. I give you that as an example because I want to know what kind of activity you're seeing. You know, is there a desperation to go out and get rounds done from the startup's perspective? Is there willingness to deploy capital from the VC's perspective?
You are correct. With this current market environment, you're seeing a lot of tech founders raise what we call bridge rounds, which is like an in-between round before you get to your next round. That's just pretty much what the market has dictated in this current space. You are also correct that a couple years ago, you could see a company that was pre-seed with the valuation of 9 figures, and it was just like nothing. It was just something that you could see. So valuations have gone down. Some investors would like to say they're probably more realistic now as far as valuations. So you have seen a drop in those. And from a standpoint of the founder, their approach to this environment has pretty much just been to raise a bridge round to stay afloat while they continue to build their technology.
Hey, Ariane, the last question I want to go to is CPG, fintech. Where's the most activity right now? Are there any specific areas thematically that you're looking at going, whoa, there's a lot of activity here?
For us, as I was stating before, we're 50% CPG, 50% technology. And the sectors that we are in, yes, there's definitely heavy activity. One thing I can say, even on the tech space, of course, right now, we all know that AI is like the new hot thing. We've been investing in AI now for about a couple years. We invested in a company by the name of Clever. Aria Moore is the founder on the AI space. But you'll see a lot of activity there. One thing I can say, even back to fintech, is that a lot of the female founders that are of color, they are very hot for acquisition in the area of fintech.
Fearless Fund CEO Ariane Simone. We'll get you back on. Thank you so much for your time. Now, coming up, Arm files for a massive IPO. What we know coming up next. This is Bloomberg. SoftBank's semiconductor design unit, Arm, filed confidentially over the weekend for an initial public offering. Joining us now is Bloomberg's semiconductor correspondent, Ian King. Valuation's really interesting here. We've been covering this saga, story, for quite a long time. Where do we settle out on that?
Well, if you remember, NVIDIA was trying to buy them for $40 billion. Right?
Yeah.
Based upon where their revenue is, roughly $1 billion a quarter, that's a massive valuation. If you were to compare that revenue level to publicly traded companies, they'd be worth sort of 10 billion, probably well less than 20. So really hard to put a valuation on it. Obviously, a lot of people really like their technology and really like their prospects.
What does Arm do? You say they like their technology. I mean, what is Arm?
Yeah, I mean, it's a very good question. It's hard to understand the licensing of an instruction set, I realize.
Yes, niche.
The way to understand it is they produce a layer of technology that is in every smartphone, increasingly in computers and also into data centers as well. And they're moving up the food chain. They're doing more of the design. They're doing more of the kind of thing that Qualcomm and Broadcom would do. And that's a very high margin business.
Is this going to be a really, really big payday for SoftBank?
Initially, no, in terms of the cash. They've said, look, we're not going to dump our entire holdings into the market. We're going to put an element of our holdings into the market. But what it will do is let people know what Arm is worth. They paid $32 billion for this in 2016. People will be looking for this as a kind of a cornerstone of SoftBank's holdings to kind of restore some faith and confidence in that company's investing and, you know, try and get a valuation of well above that 32.
There's also a jurisdictional or territorial angle to this story, which is Arm is a UK-based firm. Right. It's a US listing. Yep. SoftBank's in Japan. Yeah. That's quite complicated.
It is. I mean, the UK, as we've written, has really, really wanted them to come back to the LSE and really, as far as we understand, have failed to do that. So it's going to be a US listing. A lot of Arm's operations, its CEO are here these days. Headquarters is still Cambridge, and obviously the ownership is in Japan, so a lot of regulatory issues that needed to be navigated there.
Also, give us the boilerplate. There's a lot that we don't know, like timing. There are lots of factors that need to happen before we move forward with this listing.
Yeah, I mean, the big thing is to focus on this is going to be the biggest tech IPO this year when you look at it from a valuation perspective. They've said all along sort of second half of the year. Typically, you know, we've got the filing now, so that says probably autumn, right?
Bloomberg's Ian King on all things Arm. We're awaiting that listing. That does it for this edition of Bloomberg Technology. Come back tomorrow for a jam-packed show with guests, just for example, Uber CEO Dara Khosrowshahi, Apple co-founder Steve Wozniak, and SoFi CEO Anthony Noto. You don't want to miss that one. And okay, look, we're just a day into the week. We have earnings, we have a Fed meeting, but there's a lot to recap. Check out the podcast wherever you get your podcasts: Apple, Spotify, iHeart, and of course on all of your Bloomberg platforms. Apple comes later in the week. That is where a big portion of our attention is. But don't forget the discussion we've had in the show, which is the QSRs are reporting. Will they talk about AI? AI has been the buzzword of this earnings season, not just for the technology sector, but more broadly. Go and check out that Bank of America data. Well, we will track it here on Bloomberg Technology. This is Bloomberg.